Yo, what's good, guys? I'm Dips FX, and welcome to another exciting video. So, in this video, I'll be talking about candlesticks, and this video will be divided into like two major segments, which is like the first one will be talking about candlesticks, what they are used for, and identify them and their meaning. Why the second part will be candlestick pattern and what you should look out for when you see a candlestick pattern in your chart and the likes of them. So if you are returning back, don't forget to like and share this video, and if you're new here, don't forget to subscribe for more amazing content, guys. See you soon.
Hi guys. So firstly, I would like to talk about the bearish and bullish candlestick, like shown here. So we all know that this is the body body of the candlestick. So this is the body of the candlestick. Same thing here. Body of the bearish candlestick. So firstly, you should always know that when like a new candlestick is forming, there is like the opening price of the candlestick. So price opens here, then closes here. Then after the close, like sometimes you notice that there are wicks here, just like this one and this one. So this particular wick here is called the high wick. Why this one down is called the low? It's called the low wick. Yeah, because the eye week shows that that was where the particular count got to like highest place it got to before it actually closed, right, just right here. So why the low week shows that that was the lowest point. It was the lowest point in time the candlestick got to before the close. Like same thing here too. So here was also the highest place the bearish candlestick got to before the actual close. And likewise here too, here was the lowest point it went to before the close here. So there are differences between the bearish and the bullish closing, because you see that like they're in opposite, like they say opposite stuff. Because yeah, the closing of the bullish is always above, while the closing of the bearish is always below. Like that's why I can easily identify it's a bearish candle, because they always close below, while the bullish candle always close above, which is in profit. So like that is just like the major thing you need to know about Japanese candlestick. Yeah. So secondly, guys, we'll be talking about the buying and selling pressure. Yeah, buying and selling pressure. Yeah. So here is a selling pressure. So you know that like at a particular point, price go to this peak level right here before it initially went down. So this means that like the selling momentum of this particular candlestick was very, very high, because it got to a particular point right here, which was in like a buy candlestick before it initially dropped. Same thing too also happens when there is an initial buy momentum. So this is also called a buy momentum, because the price at a particular point got to this place before going up to close. So this is called like a strong buy momentum, while the opposite is called a strong sell momentum. Yeah, so basically guys, if you should see a candlestick like this, a long candlestick like this that shows this bearish. Shows this bearish. So you should basically know that the price should be going down because the pulling momentum, like the sell momentum back down, is very strong. Same thing as if you should see a long same candlestick like this, and that's this buy momentum. You should know that the buy momentum is very strong. So it's predictable that the price will go up or will go down and vice versa. So lastly on the basic of candlestick, I would like to show you guys what candlestick looks like when we are in key levels. So if you don't actually know what key levels are like the points in the chart where like they are random numbers, just like let's say in GGPA there's like a 100 and there's like 1 1 4 0 0. So in the particular key level, they're like mostly resistant. So candlesticks often look like this in a particular key level, just like this. So they're either like this, slim, yeah. So candlesticks looks like this most times when they're like rejecting a particular key level. So in this same period, they are just trying to consolidate. So the bias is either if the candlestick is going to break up to the is going to break the key level or to continue downwards. Well, that means the key level is like still rejecting the price action. So sellers are likely to either follow the sell in a particular key level. Yeah. So another example is candlestick in a trend line in a particular trend. So most times candlesticks are mostly like this in a particular trend, and like this, this, like this. Then another push back up like this, and like this. Then another push down like this, like like this. So this shows that candlestick is following a particular trend, downward trend. So they're easily recognizable until like I will definitely show like a more typical example of this pattern. So I'm just trying to illustrate there with my diagram. So up to the next section of this video. Yeah. So guys, to the next section of this video, I will be talking about 5 best candlestick pattern that I trade. So let's go to the screen, guys. Yeah, so up next, guys, I'll be talking about the 3 line strike. So the 3 line strikes are basically back to back bearish candle and or bullish candle. So just like this. I'm sorry, and like this. So this is basically a bearish 3 line strike. Right, this is a bullish 3 line strike. So a 3 line strike is mostly like encountered when there's an upward momentum, like a big push to the upside, like after a back to back opposites, after a back to back opposite after a back to back opposite move. Yeah. Same thing with the bullish string down strike. So with the bullish string down strike, there's like a big sell after a bullish momentum to the upside. So that is just basically a trend down strike candlestick pattern. Yeah, so that this is a typical example of the three line strike candlestick pattern, just right here. So as you can see, there's like a one, two, three before an initial huge bearish engulfing that hold the trade back down. So this is like a beautiful three line strike setup, and after this you can just enter right here. Um, our stop loss will be like right above the three line strike, and let's say our entry was just right here. Our entry was right after the initial three line strike. Right somewhere here. So our TP will be in the next. Our TP right here. Right here. So yes guys, a beautiful 1 to 2 reach to reward trade. Beautiful trade. So three line strike you can easily see sniper entries and the like. Um, Also, one major thing is that for some reason I don't like practically use the three line strike because I don't know, like I don't like taking trades that like are highly risky. So I actually wait for like multiple confirmation, at least two confirmation before entering any trade. So I don't usually like I don't normally trade him with the three line strike, but yeah, this is a practical example, and if you wish to go with it, yes, perfect. So up to the next one, guys. So guys, the second mutual candlestick pattern I use is the multiple candle rejection. Yeah, just as shown in the screen, like this. So the multiple candle rejection actually occurs when like either the buying or selling power is weakening. So you often see a rejection just like this one here in the particular zone. And most times, like rejection occur when like the price gets to a particular psychological level. Just like for instance, I'm sure this level will be like probably a psychological level like this, like yeah, as previously explained. Yeah. So example of the multiple candlestick rejection is just here. So like I previously said, in like the psychological level, like there are mostly rejections of candles and it like just like a bounce off here. We tested this one before the initial pull up. So they are like in this particular setup, they're like as you can see, there are like many multiple rejections in the psychological level before the initial break to the upside. So you can easily enter a buy here. I'm sorry, let's say after like the confirmation, you can easily enter a buy here. Then your stop loss should be right, yeah, like yeah, to be on the safer side, and the take profit can be right in the next zone, right, yeah. Yeah, so beautiful trade, guy. So almost the 1 to 3 risk to reward trade, which is fresh. So with the multiple candle rejections, you can easily see setup like after a major consolidation, then a break to like either to the up or downside. But you should usually trade, even like most candlesticks, you should like trade them with multiple confirmations just to be sure that you're entering a good trade. Yeah. So like here's another example of a multiple candlestick rejection. So as you can see here, there's a psychological level here that you fail to break. So there was a retest here before the initial break to the downside. So after seeing the multiple candle rejection, can easily just like wait for confirmation and then enter, go for a short right here. Very short. Sorry. Just TP should be here, and let's see our entry was right after the closing candle right here. Then TP will probably be right here. So I'll TP will probably be sorry yeah, that's why our TP will probably be right here. Yeah, so almost you wanted to risk to reward trade, which is dope. So the third candlestick pattern I could do it is the morning and evening star, just like this. Yeah, this is a practically typical example of the morning star. So the morning star occur when there's like a continuous. Let's say for instance, there's like a continuous selling pattern down to the downside. Then initially you just see like a small bearish candle that closes down below, then boom, you see another bearish, like big bearish candle that close above the initial selling pattern. So just vice versa, the evening star occurs when there's like a stop in the buy pattern. Then initially you now see a small closing candlestick, then boom again you see a big sell candlestick. So these are just like major candlestick pattern confirmation I use by trading. Hey guys, up to the next one, which is a morning and evening star. So here you have a beautiful morning star, just right here after a retest in the zone. So this psychological level was basically retested and then forming a morning star. So let's say we go long here. So just right here, let's say we go long, just right here. So after, just right after the morning star, we went long, then stop loss right after the week, or probably here. Then our TP right in the next zone, So yeah, right in the next one, yeah. So trade played out pretty well and went long. So beautiful setup for a morning star. So on the other hand, right here, guys, is an evening star, just after the consolidation and the retest of the psychological level. So yeah, and evening star also formed right here. Yeah, sorry. And evening star also formed right here. For an initial one also formed right here. So they are like very common on Japanese candlesticks and currency. So here on the GG, another morning star was spotted here. So let's say we entered a trade, we sell right here. Let's say we enter a sell right, just right after the morning star. So our stop loss will be right after where the candlestick formed, and TP to the next zone, which was right here. So a beautiful 1 to 2 risk to reward trade with the morning star candlestick pattern. So to the next one, guys. Yeah. So the fourth one is the bearish and bullish engulfing pattern. Yeah, just like this one here. So there's like a major bullish engulfing pattern here. So engulfing pattern are discovered like when there's like a big candlestick, like a big opposite candlestick right after an initial opposite candlestick, just like this one here. So Yeah, there was like a sell candlestick here. The next boom, you see a buy candlestick here. So entry levels are mostly below a engulfing. Like when you see an engulfing, just make sure you put your stop loss right below it. Same with the bearish engulfing. So there's like a small bearish candle here. Then boom, you see um a large bearish. Sorry, there's like a small bullish candle here. Then boom, you now see a large bearish candle. So stop loss should always be right above a bearish engulfing. Oh, so guys, just right here you have a clean example of the bullish engulfing candlestick pattern just right here. So there's like a shorter week before the initial big bearish week, which indicates that the market will likely go straight to the upside. So let's say we take a entry just right here, right here. Let's say we took our entry just right after the bullish engulfing. Now stop loss right there below the zone that previously were expected. Now TP will be and our TP will be to the next zone. Yeah, let's say to the next zone just right here. It's a beautiful about 1 to 2 weeks to reward trade. That was perfect. On the other hand, guys, right, we have a bearish engulfing right just right here. So a shorter bullish candle and a longer bearish candle shows that there is a bearish engulfing. So let's say we took a trade just right here, right here after the bearish engulfing in our stops right below the bearish engulfing, right below the bearish engulfing and our TP. Let's say we go for a TP to the next zone here. Beautiful 1 to 2 weeks to reward. So dope. So up to the next one. Yep. So the fifth and final one is the Maribozu candlestick pattern, which is this right here. So a Maribozu candlestick pattern, like, is common like after a big push to the opposite direction of a candlestick pattern, just like this one here. So a Maribozu is like a big pull either to the up or downside. So they are majorly big candlesticks, and mostly, if you notice, the Maribozu, like a Maribozu is identified like when they are like no wicks, either no or little wicks, like to the opposite direction. So big wicks, big candlestick with either no or little wicks are majorly Maribozu. So they are either bullish or bearish Maribozus. So guys, a typical example of a bearish Maribozu is the one we have right here. So like I previously said, like a Maribozu shows that there are like plenty of traders entering for a bearish market, which like drops the momentum of the market, which forms a larger body Japanese candlestick. So right here you can see that there are shorter wicks. There are shorter wicks right here, and there's a large pull to the downside, which shows like a perfect form of Maribozu. So let's say we entered a sell trade right here, right, just right here, and the stops was right before the Maribozu. Now TP will be to the next level of support zone. So here again, guys, we have a bullish Maribozu right to the upside. So after the small boys had initially gathered, you can see small boys, small boys, small boys. Then boom, you saw the big boy, the big boy just brought a big pull up to the upside. So let's say we went long right after the Mariposa, which is yeah, or stop loss below the Mariposa, and our TP to the next resistance level, which if I check, yeah. So resistance level to the upside, and that's this was even in a buy trend. So resistance level was really up. So that is just a typical example of the Mariposa candlestick pattern.
So guys, before I let you guys go, I would like to talk about some things you guys might be wondering. So after all this, I know some people might be like, I know some of these candlestick pattern, and I still like take losing trades. So the reason might just be like, number one, I would say is lack of patience. So like you might not be patient enough to allow the setup, like the setup play out before initially entering the trade. Because I think if you are patient enough, you'll be able to see that the market the market is playing like another game, like instead of the one that you are like thinking of before. So if you are patient enough, you tend to like see the trades even more clearly. So number two will be learning to like ignore trades. So like there are some trades in the market you shouldn't take. Yeah. So like if you're not confident about a trade, I think you should just like learn to ignore the trade instead of like wanting to enter the trade by force, because like everybody wants money, and you might just like at the end of the day regretting why you entered the trade. So like learn to ignore trade. And thirdly and the last will be like losses are inevitable. Yeah. Like that's like the sad thing, and like something we should like come to realize. Losses are inevitable, and like I usually tell myself and other people, losses are lessons. So you should take your loss as a lesson, because like losses eat deeper. So when it eats deeper, like you tend to like come to realization that this was actually what I did wrong, and next time I won't be doing it. So losses are lessons. Unfortunately, guys, I'll be leaving you guys here, and we've come to the end of this lesson. So if you enjoyed this video, please don't forget to like, subscribe, and share. And I'll see you guys in the next.